Good afternoon, everybody, and welcome to the show. I hope you guys are all having a pretty good afternoon. We're just starting, and I'm just gonna double check to make sure that yeah, we do. I wanted to make sure I had that echo cancellation turned off because as you guys know, sometimes the echo cancellation can cause a little bit of some sound distortion, which we're trying not to have happen. But what a week! What a week! Um, you know, it's we've seen quite a bit. There's been a lot of news this week. I'm pretty happy with it. Everything from we got everything from the Air Canada strike that's over and done with. We had some late breaking news on Friday with Carney looking to waive a few of those counter tariffs that we have against the United States. Is that a good idea? Is it a bad idea? I guess it probably depends on your perspective, but we're going to talk about all of that. We got a whole bunch of stuff coming up this afternoon, but I always like to start the show with story number one. Let's just get it out of the way. We had our CPI report this week, and well, inflation is cooling off. That is good, but and this is not good. Groceries are still on the rise, so it's not good. It's not good. And I'm sure most of you who have been to anyone who's been to the grocery store recently, it just doesn't seem to be any end in sight. So let's get right into that report. Initially, so headline CPI, it fell to 1.7% for July. And that's actually in June, it was 1.9%. So that's a nice drop. In fact, we were expecting it to drop to 1.8%. So it outdid our expectations. Of course, the big reason, there's actually three factors that sort of come into play. One, of course, being gasoline prices. Gasoline currently has dropped 16.1% year over year. And that's actually driven by three. I guess the three reasons actually are all about gas. We had a ceasefire between Israel and Iran. That certainly helped keep oil on the downside. There's been increased oil production because OPEC, they've knocked up their numbers, and that's also helped keep oil low. And the big one is that elimination of that consumer tax credit, as I mentioned. Consumer tax credit. Where the heck was I thinking? Because of the elimination of the consumer carbon tax, this is going to pretty much skew all of our numbers, our oil numbers, down until we get to the 1 year mark. So when did he do that? Did he do that in January? So I think until next January, we're going to see a skew. Now, this, of course, is pretty good news for drivers. So that's not too shabby, seeing the prices at the pump down a little bit. But it's not the full story. So we still have an issue with grocery, and the grocery prices, they climbed again. So in July, grocery food prices came in 3.4% up year over year. Now in June we were complaining. June it was only up 2.8%. So it's gone from 2.8% to 3.4%. And there's some pretty big standouts in the food section. Fresh grapes. And this boggles my mind. I haven't had a grape in a while. I love grapes. But fresh grapes, they're up nearly 30%. Coffee and chocolate, those are both continuously rising. Now that's not so much, that's more or less a production issue. We're talking about poor harvests in some of the producer nations for those. That's more, I would say that's more a climate change issue than straight up inflation. Also, fresh fruit. So fresh fruit overall has jumped from 2.1% the previous month up to 3.9%. Some other things that have been edging up. So it's not all good news, but shelter inflation has edged up a little bit. Shelter costs rose 3%, up slightly from June. So June it was 2.9%. So it's not a huge amount. but it is the first uptick that we've seen since, well, February of 2024. So not even this February. Now there was rent increases in a few places in the country. So the three provinces that really helped push this data up: PEI, Newfoundland, and British Columbia. But on the mortgage side, and this is kind of good news. Some of those mortgage costs are falling, but the rents are just moving faster. So overall, the rents are moving fast enough to basically to keep housing inflation, keep it in a stubborn category. So what does this mean for the Bank of Canada? It brings us to the whole to cut or not to cut. So right now, the current rate 2.75%, and our next meeting is September 17th to be precise. Now, the one big sticking point, and this is what's been holding the Bank of Canada back from another rate cut, and that is core inflation. So those ex-volatile items, they're still stuck at 3%. And the 3-month trend shows basically 2.4% annualized, but it's at 3% that the Bank of Canada is having a hard time getting past. And economists are saying that as long as it stays at 3%, it's just not enough to warrant a cut. It's not enough yet. So we'll have to see. We probably are going to need some amount of a downside surprise to push the Bank of Canada off the sidelines again, to get the cutting machine back in process. Now, we also had the PPI, so the Producers Price Index, that came out as well. And that, it created some higher than expected inflation on the wholesale side. And that mostly was thanks, of course, to tariffs. So it came in at 2.6% compared to what we had forecast. We had forecasted it to come in at 1.9%. So PPI definitely showing some signs of tariff inflation starting to creep in. Oh, I love that coffee. Hopefully that's not going to be a sign of what's to come with the CPI. So right now, like I said, inflation down, groceries up, wholesale inflation up, Bank of Canada not motivated to do anything. All right, now that we have broken that first story, let's hit the chat. Let's see what's going on. Claude is in the house first. Oh, that's not a name I normally see in first place. Jonathan, wherever you are. Claude says, hello, I bought a good chunk of Celestica at $2.44. Pretty happy about that. Celestica. So let's take a look and see, what the heck? Oh,
I'm not quite sure how to help you.
I am sharing the wrong screen. Let's remove that. I don't know how that happened. All right, give me a second, guys. Let me pull up the right screen. I can't believe it was on. That's why it looked odd. I was looking at it. I'm like, that looks pretty darn odd. All right. Here we go. Just be 1 second here. It's coming up. It's coming up here. Here we go. This is the right one. Here we go. Bang, boom. All right. And I have Celestica already pulled up here for Claude. So you got it at 244. Look at this. You pretty much got this dip right here. Nice, nice. So if you got it at 244, you are already well into profit. Because look at this. We're sitting at 261. That's a good swing trade. If it is a swing trade, you might be planning to hold Celestica for long term. But if you did this as a swing trade, not too shabby. Oh boy. That's actually, speaking of swing trades, I'm thinking of starting to document all of my swing activity over on the community tab for the channel members. So I'm thinking of that being an extra little benefit I might throw in there. Let me figure it out though first, guys, And we'll see if I can get something put together for that. All right. Brian says, good afternoon, everyone. Already 10 likes. Gotta love that. Yeah, guys, definitely. Let's break a like record today. I don't know what the like record is, but let's just break it. Max says, happy Sunday to all. King of Days in the house with a hello, everyone. Happy Sunday. I won't be able to stay long. I have family members coming over. Happy investing, everyone. Yeah, nothing like having the family members. Speaking of family members, so Canadian Thanksgiving that weekend there will not be a this week because I'm gonna have family members over. Holy cow! My mom is coming for a visit, so I will be trouncing around Ottawa, showing her the sights. I'm not sure what sites yet, but that will be one. So, can't remember the last time we missed a Sunday, but I'll have the schedule up. Don't worry. Anyway, Bismarcky says, happy Sunday, everyone. Joe is in the house with a good afternoon, everyone. Brian says, finally saw HHIC come out, and surprisingly, SHPE is paying 25% dividends. I bought at $11.78, which was nice. Yes, so those new harvests, high income Canadian shares, they're up for business. They're now available. So HHIC, and I want to show you this. I want to show you this here. I have not yet bought, but I do want to add it to the challenge. But I'll show you why I haven't bought yet. All right, let's pull it up here. So we're at that beginning part where it really, really peaks. And with most of these, we will get a nice big peak, and then we'll get a retraction, a little bit of a retraction. So, hopefully this does what every other single one of these has done. I'm waiting for that retraction so that I can get back in at a cheaper price. Well, I'll tell you, if you did get it down, if you got it down close to 12, you're probably looking pretty happy. Speaking of some of these high income funds, this one is just pretty happy. I'm happy with this one. I'm very, very happy with this one. And Shopify is looking really, really good too. Now, Shopify, they have that volatility that they can definitely support a pretty big dividend. And we're already seeing some big dividends on these. In fact, let me see, what do I have here? Oh, this is Hamilton. HYLD, okay. Not exactly where I was intending to go, but I was just seeing if I had it up there. Nope, I was looking at my tabs. Just give me a second here. Let's go over to Harvest. All right, Harvest, single company, not Harvest, high income shares. There we go. This is what I'm looking for. All right, let's head in. All right, perfect. All right, now these here are, we have to go down here. These are all of their dividends that they're coming out. So this one here doesn't have the yields down, but it's just simple math to get the yields. They're all pretty impressive yields. But right now, when we look, Shopify, 25 cents. 25 cents a share. That's pretty darn good. And as I said, HHIC here sitting at 16 cents. Now, these are preliminary, guys. I imagine there might be some amount of movement. Like, I know that with Harvest, a lot of it comes down to volatility because they need that volatility to make the covered calls. Because if you don't have volatility, you can't make a premium. You can't make a good fee to sell a covered call. So as long as these guys stay volatile, these prices will be fine. But if we do get to a point that if any one of these decides to become very, very less volatile, you could see some dividend changes in there. But for the most part, I like these numbers. I like where they're at. I think it's going to go well. All right. All right, let's jump back here. We got JJ in the house with a howdy. Hello, JJ. Hope your day is going well. Kelly says, smoky here today. Yuck. Good afternoon, all. Yeah, it's pretty bad when the smoke. Right now, as far as I know, I haven't smelled smoke in a little while. So it hasn't hit Ottawa at least at least this week, but that can change. That can definitely change. Brian says I wasn't planning on buying SHPE. Um, yeah, and that's the thing. I am pretty happy with. I'm pretty happy, I think, with the HHIC, and JJ is mentioning. So HHIC has a direct competitor now, EHIC from 9 Point. Would be very interesting to see the long-term performance between the two. Yeah, absolutely. Um, let's take a look at EHIC. I have not seen whoa. I have not seen I'm just gonna close that one window because I don't want to go back to it because that's one of those infinite loop windows. Wait a minute, where is my over here? I got too many windows open, guys. So this here EHIC. Let's take a look here and see. I got nothing. All right. let's try EHIC ETF. We'll just come in here and see what we can find out. Yeah. I'm not getting anything. Oh, wait, here. No, EHIC. Car services, AR. Now, that's probably not it. All right. I don't know what that one is, JJ, but I'll keep my eyes open. I will keep my eyes open, unless I'm just not finding it. I don't know. Jersky says, hello, everyone. And Brian says, I'll have to check out EHIC. Mary's in the house with a hello, everyone. And Mary is our official captain of the like button. So, guys, you got to hit like. Otherwise, Mary might glare at you. I always get to have a sip of coffee when Mary pops in, too. So makes her one of my favorite people. Brian says, so many ETFs coming out in Canada, impossible to keep up, let alone decide what to buy. That is true. And as I kind of mentioned in, was it my last video? It was one of the last couple of videos. It's not a bad thing to have too much choice. It does mean that you have to do a little bit more of your own homework before you decide. But it does make it easier to cater your portfolio to exactly how you want it. And that's always, to me, that's always a good thing. Actually, speaking of choice, and the next video coming out, so this is the Tuesday video, though, channel members can see them tomorrow because they get to see it a day early. We're going to be looking at the S&P 500. I have technically 4 different takes and a wild card on the S&P 500. So we're going to look at it. This video has stuff in it for every type of investor. Your total return investor, your income investor, your tax efficient investor. There's a bit of everything in this one. So we're going to look at it from a whole bunch of different angles. It's a list like I've never done before. So I'm looking forward to it. Zozo is in the house with a high Mountain Finance. And, well, hello, Zozo. Brian says, good afternoon, Mary. I hit the like button. Awesome. Bitcoin selling off this Sunday. Are we getting a little bit of a, uh-oh. Let's take a look. All right, this one is pretty simple. We just come over here. I would pull out our thing, and let's get down here and see what's going on. A little bit. Look at this. That's a pretty big red candle. We're down to 112,000. So Bitcoin down 2.51%. That's a little bit of a sell-off for sure. Ethereum, though, look, Ethereum's not really, it's got a little bit of a sell-off, but it had a nice little build-up before it sold off, so you don't really see it as much when you're looking at that negative 0.09 there. All right. Bismarcky says, cherries $5 a pound at the grocery store today. Guess where they stayed? Needless to say, the grocery store. Yeah, that's nuts. $5 a pound. A lot of things are like that. There's a lot of foods that, especially foods that are more of they're more of a complementary food, like, well, grapes or cherries that, people are just not going to eat them anymore. The prices keep going crazy. MC is in the house. Hello, MC. Good to see you. And Brian says, not sure where cherries are in season right now. That's a good point. I actually don't know. All I know is when I lived in Vancouver, usually cherry blossoms were all over the place early in the spring. But yeah, that's all I can say. Luke says, good afternoon, Mary and everyone. Ian says, I can cover for you on Thanksgiving. I can live stream, but it won't be very informative or interesting. It's actually interesting. So one stream I used to do. I used to be one of the members of the Crypto Night in Canada stream over on the Dancer Show, and they actually went away for one of them, and they were like, "Let's just have the stream anyway. We're gone." But so they gave me their logins and they let me run it. Of course, that stream got called Holy Banana Bread, but why not? Why not? Brian says, let's see, I bought HHIC at 1203. It was good enough. That's not bad. Yeah, I mean, right now, what is it? 1240. So pretty darn good. Rory is in the house with a good afternoon, everyone. Let's see, the yields are what the cents are since it's 12 and 12 months to calculate. Easy math. Yeah, exactly. The Daymax ETFs got a raise. Yes, I heard they did a little bit of a dividend boost on S Day, C Day, and Q Day. So that's not too shabby. That's not too shabby at all. Jack is in the house with a good afternoon. Oops, I spelled it wrong. It's ECHI. Okay, all right. That might make a difference. All right, let's see this. Let's see if we can see this now. ECHI. Here we go. There we go. This is what we're looking for. No, we don't need maple syrup. All right, 9-point enhanced Canadian high shares ETF. So it just launched. So interesting. You know what? We're probably going to have to go to its website, because I'm not going to get any information here. Let's do it. Let me just pull this up here. I am curious. I'm very, very curious here. All right, ECHI ETF. And I'm going to put in 9-point here as well. All right. Let's see. 9 points enhanced Canadian high shares. Here we go. Woo! That's actually not a bad looking website. So management fee 0%. Now keep in mind, guys, that's the management fee. Management expense ratio, we won't have that for a while. Not on a new ETF anyway. So let's see. Maximizes yield, cover calls, management fee, 25% leverage, tax efficient. Okay, all right, that's interesting. But let's see if we can get some more information here. Ticker distribution. They have not announced yet what that dividend is. Yield enhancement. What are they holding? What are they? Education. We don't need education. I just want to see. I want to see what you're holding. That's what I want to see. 9-point Shopify. Oh, look at this. They have some of the others as well. So 9-point Shopify high shares. High Point Royal Bank. 9-point Royal Bank. 9-point TD. Interesting. Now, I will point one thing out right away. Right away, I'm going to point this out. I trust Harvest. I don't know a lot about 9-point. So Harvest has that going for them. Harvest has been around for a while, and I think a lot of people really trust Harvest. So I think if 9-point, if they want to really give Harvest a run for their money, then just do a good job. Just do a good job and let that speak for yourselves, because right now, like I said, I'm a little skeptical. I don't want to say I'm skeptical. I'm just not willing to trust them yet. And I don't know. Let's see here. I don't know if documents will show us anything. Simplified prospectus. All right. So let's see here. 9 Point Cameco. All right. So it looks like they actually completely copied. Look at this. We got well, they got Barrick though. Harvest does not have Barrick, but BCE, Cameco, CNQ, CNR, Enbridge, Royal Bank, Shopify, Suncor, TD. So yeah, they've got a few of them. They've got a few of them all in here. All right. Well, I guess in this prospectus, I can probably figure out what they're doing. They're probably holding. I assume they're holding all of their other ones. That's what I'm assuming. But well, we'll have to see. We'll have to see. Right now, my money is on Harvest. My money is on Harvest for sure. JJ says it's 9 Point high income shares all in one. If it's Eric Nuttall approved, count me in. All right. Well, there you go. Let's see. Not much of a sell off. The bulls come in to buy 111K key support level. Yeah. I mean, that's the thing. I still think we got another big pump with Bitcoin. We still got another big pump. Rory says, let's see, Eric Nuttall is my go-to guy for oil gas investment ideas. Hi Cam Dace. I hope you are well. Glad UNH is doing well. So yeah, United Health. It's always good to see United Health doing a little bit better. All right. Let's see, what do we have here? Yield says, I would spread across the different providers, Brompton, Evolve, Global X, Hamilton, Harvest, Purpose, 9 Point, strictly no single stock covered call ETF except MSTE and TSLY. Yeah, I mean, and like most of these companies, like Evolve, Global X, Hamilton, Harvest, Purpose, they've got that name recognition. 9 Point still, 9 Point's a kind of they're sort of like the B team at this point. That could very well change. Like they do a good job, and let's see what they got. But yeah, there's nothing wrong with diversification across companies, across management teams. Yeah, it's fine. It's fine. Some of them, like, for example, Harvest, Global X, Evolve, those, and Purpose, those ones, and Hamilton. So those are kind of my go-to. But I do like to look into, and there's a few others. There's a few other smaller ones in there too that are interesting for sure. Jack says I need some Holy Banana Bread merch. Well, I think there is Holy Banana Bread merch. Bismarcky says, are we going to talk about Meg Energy in the news? Meg Energy? Oh, yeah, I heard something about Meg Energy. Yeah, was it, I think was it Synovus who bought them? But yeah, Meg Energy has been purchased. There we go. Rory says, Meg, Synovus, Strathcona is the big oil news so far. Absolutely. Let's see here. I screwed myself selling Synovus early because I was worried they were going to have to dilute shareholders for Meg. Then they turn around and get a steal of a deal. Yeah, that happens sometimes. That happens. But you know what? Most times, when you fear that share dilution, a lot of times that is the way it ends up going. So it was probably a smart play that just didn't pan out. Yeah, exactly. 10 single stock. That's what I was kind of thinking. Perfect. Let's see. Was a small position anyway. Should have let it run. Brian says, I trust Harvest as well, and my pick seems to be mostly heading towards their ETFs. Rory says, I'm going to get a position with Whitecap again. I wonder if Baytex will ever be in a takeover bid. So cheap. I like Baytex. I think there's going to be a swing opportunity with Baytex coming up. Oroku says, yep, I stick with the pros. Harvest, Hamilton, Global X, Vanguard. 9 Point has 7 billion assets under management. Okay, that's not too shabby. Yeah, and keep in mind, I just want to point out, I'm not saying that 9 Point is that you shouldn't trust them. I'm just saying that I haven't had a lot of dealings with them. So until I have more dealings with them, there's going to be a little bit of a trust thing that needs to be built. It hasn't happened yet. It hasn't happened yet, but it probably will soon enough. All right. We're finally caught up. That means we can talk about another news story. So we also had our retail sales report dropped on Friday. So we did see a little bit. We saw some retail rebound in June, but July is kind of setting themselves up to be a completely different story. So June retail sales, they surged by 1.5%. So we're looking at about $70.2 billion in sales. We saw some broad-based growth across all 9 retail subsectors that are tracked, mostly by Stats Canada. So food and beverage, they actually did pretty good. They led the way with a 2.3% increase. Clothing, accessories, shoes, and jewelries, they were up 5.9%. So Canadians seem to have been spending a little bit, spending for the summer a little bit. Core retail sales, so that includes gas and autos, that rose 1.9%. And there's definitely a sign of some solid customer demand there. Now, even adjusted for inflation, sales volumes, and this is kind of a neat thing. So our volume of sales was up 1.5%. So basically, that means that Canadians weren't just spending more because of higher prices. They were actually buying more. So that's kind of a nice thing to know. Because sometimes when prices go up, it may look like we're spending more and we might be buying less. But in this case, Canadians were buying more. But, oh boy, we got July coming. So July does look a lot weaker, and so far the preliminary estimate is showing July to be actually a drop in sales, down about 0.8%. So there seems to be a pullback coming, and this figure, of course, it is preliminary, so they do sometimes get revised. So hopefully that gets revised up, but it is looking like we could see a little bit of a consumer cool down heading into late summer. So what does this mean for the economy? That's always one of those things I always want to know. So the June jump definitely shows resilience in consumer spending, even with high borrowing costs and inflation concerns. And then, of course, moving into July, that potential dip might very well reflect a little bit more caution from consumers as economic uncertainty has been building. Also, back-to-school spending seems to be not picking up as quickly as normal. It looks like it's being shifting into later into August. And there's also a little bit of a reaction just to ongoing interest rate environment. So we have to see what this is all going to look like. For now, it's kind of a wait and see. Now, with some of the news, so as you guys may have heard, Carney has come out and said that he's been in talks with Trump. Fantastic. I like the fact that he's been having some conversations with Trump. And he has decided that any of the items that we have retaliatory tariffs on that fall under the USMCA, so that's our free trade deal, that those tariffs are going to be dropped. And that it does make sense, because here's the thing. The U.S. has not been charging us tariffs on anything covered under USMCA. So they've been respecting it. And he's basically just saying that as sort of a sign of good trust, we're going to do the same thing. And that's fine. Maybe that will help when it comes to renegotiating the USMCA, which is going to happen in July. And hopefully there's more stuff coming. Hopefully they've got to, because right now the big issue is not even with, because when you average out all the tariffs across Canada, it's not high. Like, we've got one of the better deals out there. We absolutely do. We have a very low on average, but that's not what's hurting us. What's hurting us are those sector specific ones. So for example, that 50% on steel, aluminum, copper. These are the things that we need to get some movement on. And hopefully, sort of backing off on a few of these other tariffs. Hopefully, that's going to be a bit of an olive branch so that we can get something happening with these other ones. Of course, and now that Pierre is back, he's not happy with it. Pierre was actually not very happy with it. He made a comment that what happened to elbows up? Now it's no elbows or something like that. So we'll have to see how this is all going to roll out. But I'm hoping there's more going on behind the scenes than they're letting us know. Because apparently they had a pretty long conversation. So I'd like to see some movement on on the sector-specific tariffs for sure. All right, Rory. Rory says, we have 30-degree heat coming this week in the West. Yikes. Yeah. It's actually cooled down a lot in the East. So that's not a bad thing. Brian says, EIT, as always, my safe go-to stock. I found out 26.5% was way too much of my portfolio. Pared it down to 18%. Still way too high, but it's a start. Yeah. Keep in mind, when you're looking at something like Canoe EIT, and I would also put Brookfield, both Brookfield Corporation and Brookfield Asset Management in the same department, because it's when you have a stock like that what they're doing is they're investing, because they're a fund, they're investing in other companies. So for that reason, you can, like if you say I don't want to have a single company more than 5-10% in my portfolio, well, they're not a single company per se. You can sort of look at them as being a bit of a basket of companies. So there is extra diversification that comes from that. So just something to keep in mind. Brian says, if a finance guy looked at my portfolio now, they would say, oh my God, why so many ETFs and stocks? Yeah, we'll have to look. We'll have to look at your portfolio one of these days. Bismarck, he says, selling all my EIT and going into HHIC. All right, Bismarck, he's going all in. Well, not all in, but at least the EIT stuff is moving. Brian says, that's where some of mine went, as well as SHPE still have cash looking at HHIH as well now. Okay. So yeah, a lot of these new ETFs, that's for sure. Bismarcky says, I'm still not going to the States while that orange spray tan man, I love it, in the White House. There we go. Yeah, absolutely. Rory says, a lot of visitors seem to avoid the U.S., not just Canadians. Oh, there we go. Let's get that up. Kawachin says, how do you think the banks are going to do over the next while? National bank dividend has not been this low. Too often will history repeat and we get a pullback? All right. I am looking forward to the banks. I think our banking sector has a lot more resilience in it. I think they're going to be fine. I'm not really expecting any kind of a sector pullback. Obviously, if we go into a recession, there'll be a bit of a pullback from that. But here's the good news. Next week, so this week coming up, we've got our bank earnings coming out. So that does mean the following week we're going to actually have a bank video, early September, I guess. We will have our annual bank review, and I want to change it up a little bit too. So I'm going to do something a little different with it, but it's still going to be the same, but it's going to have a little something else. So I'm not going to spoil it yet. But I got something planned. Rory says Las Vegas is empty. No cash is moving around anymore in the hotels and casinos. Yeah, I can believe it. Yeah, I mean, tourism right now in the U.S., they're just counting. They're counting 3.5 years worth of days waiting for those to pass. JJ says, I just buy bank. Don't care about the single ones. Never looked back and never will. There we go. And bank is a great ETF. And bank has been, they've been in the green in my portfolio for a long time. Rory says, I trimmed CIBC and RY for some profit, waiting for the dip. Okay, fair enough. Brian says, if banks tank drastically in Canada, that would be the least of your worries. The entire market would be toast. Yeah, I mean, right, like I said, the Canadian banking system, there's a lot of resilience in it. And they're not going to be what leads us into a recession. Trust me, that's the type of recession you don't want to experience. So I think we're going to be fine. All right, big Y from Evolve is coming soon. It tracks the top 10 U.S. companies by market cap, 1.33% leverage, writes up to 50% of the portfolio, distributions twice a month. Yeah, that one sounds good. That one definitely sounds very, very interesting. And I think we're going to see, now that we've got S Day, C Day, and Q Day, I think we're going to start seeing a few more of these more frequent. We may not get down to weekly dividends, but taking that step to dividends twice a month, that's probably not that bad. All right. Kawachin says, I'm hoping for a large divvy increase or divergence. Okay. Fair enough. All right. I caught up again. That means we can actually get to our next story. And this probably looks familiar, but we got more housing on the brain. So Canada is building homes, just not where they're needed the most. So across the country, housing starts are holding strong, but not so much so in Ontario. The brakes seem to be on, and the slowdown could seriously deepen the housing crisis within just a few years. So this is not something I wanted to hear about. So Canada's home building boom is pretty much everywhere but Ontario. So in the last 4 years, Canada started over 1 million homes, with 2025 housing starts still trending strong. So Alberta, Atlantic Canada, record highs. Saskatchewan, Quebec, and Manitoba, some very strong momentum. The national average, over 250,000 housing starts annualized, far above the pre-pandemic norms. This is good. This is what we want to see. However, and I'm in Ontario. Ontario seems to have a little bit of a building bust. So Ontario is currently dragging down the national average. Housing starts in the province are at their lowest 6-month average in a decade. The decline is, of course, steepest in, this is not going to be a surprise, the GTA, so Greater Toronto Area. And it's not just a dip, it's a warning signal that we're falling behind in Ontario. Ontario has a goal, and that goal is 1.5 million homes in 10 years. At this pace, we're not even remotely close to that goal. Not even close. So what the heck is going on? Well, we got a couple of issues. One is we've got high construction costs. So right now, Ontario is leading the country in building cost increases. So we're talking land, labor, materials, as well as municipal charges. Builders are facing difficulty launching new projects at prices people can actually afford. So yeah, I mean, you can't build a house if there's nobody who can pay for it. We also have too much inventory, which is kind of an odd thing to say, but there's a glut of existing homes for sale, especially in those GTA condos. And that is overall cooling demand for new builds. New condos, well, right now, new condos are absolutely too expensive. And used condos are currently dropping in value. So, oh my gosh, frog. So that's basically crushing our pre-construction sales. So it's a key trigger for building activity overall in Ontario. So we got a couple of things going on here. One, of course, is we're experiencing a bit of a investor pullback. So the higher interest rates, weak rental demand have driven investors away from pre-construction units. Simple as that. Without investor backing, many projects, they're just not even going to break the ground, which is not good. Some of the other issues involve, believe it or not, permits. So Toronto and other Ontario cities are still issuing lots of building permits, but Developers just aren't acting on them. High fees and lack of financial viability are stopping projects before they even begin. The pipeline overall, it's clogged not with red tape, but with red ink. So Doug Ford, he got rid of the red tape, but now we got to do something about the red ink. This is a little bit on the worrying side. So completions are still high for now, thanks to projects that were launched years ago. So it's kind of like we're getting a false sense of security here. But when this current under construction stock dries up, which is usually, it's going to be just beyond 2026, we do risk hitting a bit of a wall. That's when we're going to run into supply shortages that are going to get worse. Affordability will erode further, and rebounding immigration could pour fuel on the fire. We won't necessarily feel the pain tomorrow, but we are banking on a crisis in about 2 years from now. So what can I say? What can I say? It's not great. It's not great, guys. All right. Let's get back to the chat. Let's get back to the chat here. Let's see, where the heck are we? Oh wow, a whole bunch came in while we were talking. JJ says, any new updates on the Air Canada strike plus union negotiations? So yeah, I mean, what's happening now is they're starting to get the planes back in the air. They do have a tentative deal with the air with the stewardesses, so the air attendants, cabin attendants, whatever we want to call them. So they're going to get paid for one of the big issues was the work they do when the plane's not flying. So they weren't getting paid for all the work they do, boarding people and everything else, and all of the work they do after the plane lands. So with this new deal, they're going to get paid basically 50%. They're going to get paid 50% for that work. So they're at least, now that's a lot more money for them, and that's good. That's certainly good. I don't know if they have ratified the deal yet or not. That part I don't know, but I know that it looks like that's going to happen. So yeah, right now it's a matter of taking care of the backlog, trying to get things back to normal. All of that fun stuff. I know a lot of people, Air Canada did, especially for domestic flights, a lot of people ended up being shipped by buses and trains and all kinds of different ways. But if you're planning a 2-week vacation in late October, I think you're safe. I think you're safe. But you know what? If you're really worried, there's always WestJet. Brian says, I'm trying to track my dividends and stock total returns. I've had my own spreadsheet, but was wondering what everyone uses. Free, TD was okay, but Wealthsimple lacks a lot of details. One thing that you might look at, it's called Passive, Passiv. So it can hook up to your Wealthsimple, and it can sort of help you track dividends and things like that. I haven't really used it very much, but I know a lot of people really love it. But you could always look at that. Personally, I do most of my tracking in Excel because I love spreadsheets. So that's what I've been doing. Rory says, is Bird getting new contracts for construction or not? The stock price took a steep drop. Yeah, Bird is taking a little bit of a hit. I'm still very bullish on Bird, and if anything, I'm just going to add more while it drops. They are in a very good position for when them government contracts start dropping, and I think Bird's going to do fine. So yeah, take advantage of the dip. That's what I'm doing. I meant rate cuts. All right. Ofer says, what would be your favorite healthcare and utilities funds? Always a good question. It really depends on what my goal is. But when it comes to healthcare, right now I'm not really touching healthcare for the most part. Now, other than long-term care homes, I'm all over them. So, for example, Extendicare. I like Extendicare. I'm putting in, that's a REIT. So, I mean, well, they're technically they're not a REIT, but they're like a REIT. So, I like Extendicare. There's also SIA. I'm pretty strong on them. Now, when it comes to utilities, Right now, in the challenge, I've been what is it? XUT. I've been, and I'll show you. Let me pull it up. Let's pull up XUT. All right, here we go. So yeah, so I've been investing in XUT. So this is a nice little, so the iShares S&P Capped Utilities Index. Now this one is not going to give you any income. This is just purely a growth one. But I'll just pull it up here. So give you an idea, they've been doing really, really well. Like a year ago, they were sitting around 27. They're up around 31. You'll notice here, they've got a dividend. It's not big. It's not big. 3.896. Now, if I was looking at it with income goggles on, so if I really wanted to look at it from an income point of view, I would probably lean towards UTES, UTES. So this here is the Evolve Canadian Utilities, and we'll just pull this up. So this one here, you're getting a lot of income. You're getting 17.09% dividend yield. When we look at them over the last year, there we go. You're going to get some growth. You got a little bit of growth coming up in here in the last little bit, but you're not going to get a lot. You're going to get mostly sideways with this fund because, well, it's not designed to grow. It's designed to pay you, and that's what it does. So yeah, that's kind of how I would look at that. All right, yield says M. Kovacs, Harvest CEO, says CBOE Exchange is the only one that supports twice-a-month distributions in Canada. None of them supports weekly. Okay, there we go. That makes a lot of sense. That makes a lot of sense. So yeah, will that change? Who knows? But that does kind of answer that question because I know, I think Adriano had, I don't know if it was Kovacs. It might have been Kovacs. Had him on the other day, and he was mentioning as well that there's no plans for a weekly dividend, and if it's not even capable, if they can't even do it, then yeah, that makes a lot of sense. All right, Claude comes in. I would like your opinion on S&P 500 versus Nasdaq. I own them both with ETFs, VFE. So VFE and HXQ, and thinking about going 80% HXQ, 20% VFE. I know NASDAQ may be riskier, but it performs better than the S&P 500 very often. All right, so yeah, I mean, when it comes to the two, it's actually kind of interesting. The S&P 500 gets propped up by a lot of these big tech companies as well. So you are getting exposure to both. When you are investing in the S&P 500. But the NASDAQ, where you got the tech, tech is always going to be much more explosive, and you're going to have periods of really, really good growth. So I don't know if I would go with like 80-20. I would probably think something like 60-40 might be better. But, obviously you want, but do what you want to do. Because you're doing your due diligence, all of that fun stuff. But yeah, I do. I like it. Like I think, let's just take AI for a minute. Now, you'll probably hear people saying, "Oh, AI's done. We've got all we can get out of AI," and that's absolutely not true. The AI bubble, it's I don't even think of it as a bubble per se. I think AI is going to continue to do well. So I think there's a lot more room left for tech. Now, mind you, when we go into a bear market, tech's going to go down, but so will the S&P 500. So yeah, I mean, I'm okay with it. I just probably would maybe not separate them as much, but that's just how I would handle it. Bismarcky, there is not much land in the GTA. Every parking lot in the downtown Toronto core has been turned into a condo already. Yeah. I mean, that's the thing. What can you do? You can go up. That's pretty much all you can do is build higher. Let's see. I was scheduled to do steel work on 3 new condo buildings in Brampton. By now, last year they paused all 3. Yeah, that doesn't, and that's kind of like we're seeing what's going on with real estate with housing in especially around Toronto. Toronto, I think, is a mess. Yeah, I elbows up. Brian says, I was surprised that the 27-story condo we completed in 2024 had zero charging hookup to the underground. Interesting. Interesting. I did not know that. Let's see. I got my backup tent ready to go whenever. Backup tent. Is it a big tent? Hopefully it's one of them big ones. Let's see. Get the luxury model 2-room tent. See, that's what I'm talking about. The big tent. Get the big tent. Yeah, luxury model 2 tent in BC is just 2 tents with a tarp above. Oh, man. It might be. Do you think bird.to is going to fly? Yeah, I do. I'm very bullish on Bird. Right now, we're kind of in a bit of a lull, and I'm okay with that because I will continue to average down. I don't know, like, actually right now, let me just take a quick gander. I'm kind of curious here. No, of course it's not there. Let's just see here. I rebooted my computer, and my my 0 to 100K thing is missing. All right, here we go. Let's see here. Yeah, here we go. Pull. I'm just wanting to take a look. Let's see here. So with Bird Construction, yeah, I'm still above my adjusted. My adjusted cost base on Bird Construction is $20.37, and they're sitting at $23.76. So they're still a little high. I wouldn't mind to see. I'd love to see them come down a little bit below, but I have a feeling that pretty much every buy I do on Bird, I'm averaging up, but I'm okay with that. All right. Brian says, I've looked at a lot. They are free for 5 stocks. Okay, so that's Snowball. Is that Snowball Analytics? I have not looked at Snowball Analytics. Stock unlock is paid, but I like it a lot. And yield saying healthcare. HHL from Harvest is great. More than 1.5 billion assets under management. I personally hold HHLE with 25% leverage. JJ says HHL would still be my go-to healthcare pick. However, I'm not touching the healthcare sector anytime soon. That's kind of where I'm at. That's kind of where I'm at as well, JJ. Let's see. 2 weeks vacation in Mexico, Caribbean, all paid resorts. Nice. All right. What about Northwest Healthcare and Well Health? Well, let's go. Let's take a look at Northwest. Oh, I still have it up. I'm just... All right. All right. Whoops. N-O-R-T. Northwest. There we go. All right. So Northwest Health. And yeah, this looks like they've had some... they've been good in the last few days. Yeah, they had... I mean... They beginning of the year wasn't great for Northwest Health, but they've been pretty much moving kind of sideways since then. I've always liked, like I have invested in Northwest Health many times, and I've always liked them. But, and I guess here's my but, is that they just seem to want to go sideways recently anyway. I think at this price though, I think, well, I'm going to go back a bit further here. Oh, you're looking at even more of that big fall. Let's go back to the 5-year. So back in the day, that, you know, I'm going to go to the 10-year actually. Up and around this area, so up around the $10 area seemed like a good place for them. But a lot has happened. I don't know how realistic it is to get back there, at least anytime soon. But at the same time, I feel like they're at that bottom. So they could be worth, like, I think it might be reasonable to get to maybe I would say $8 might be something. They might be able to double where they're at from now, but I don't see it happening anytime fast. So I would see this as more of just a dollar cost average, longer play to see what's going to happen with them. But now, mind you, while this is all happening, you've got this really, well, this dividend has gotten kind of large. So when you look at the 7.229%, I mean, at one point, that was a much smaller dividend because they were worth a lot more. So that's always a question too. Can they support that dividend? That'll be an interesting question. Now, one of the things, I'm going to pull up the key data in Northwest here. And here's what I'm looking at right here. This is a kind of one of the things that I do like about them is they've got a 48% debt to equity ratio. So they do have room. They could use debt to finance their dividend if they really needed to. They're not going to. They don't need to. They're a REIT. I mean, REITs are designed to pass on their earnings anyway, and they will have a consistent cash flow. So I'm not too concerned so much about that. Their return on equity, 11.66%, considering how far they've fallen, is not bad. So yeah, see, I'm actually looking at the back end. I like them a little better than I did like 2 minutes ago. But nonetheless, I still think you need to have some patience with them. Now, Well Health. I haven't looked at Well in a long time here. Let's pull them up. So here we go. So Well Health, and I'm going to back right out to the 10-year as well. Now, they've been more volatile than Northwest Health for sure. And one of the things I like is like this one here. As far as I know, I don't believe they have a dividend. I believe they're dividend free. It's more growth. I think this one will continue to be, but once again, we're still at a situation like I think they could get back up to 7, but I don't think they'd stay up there. I think you're gonna see more volatility in here. Problem is this is a sector that even though you're going to say, well, this is Canada, yeah, it is, but all of the stuff happening in the U.S. tends to sort of filter through, and I just don't trust the healthcare sector as much right now. So between the two of them, I would have a lot more faith in Northwest Healthcare than I would in Well, but that's just me. That's just me. And at least with Northwest Healthcare, you're going to get a half-decent dividend while you're waiting for them to recover. All right. Rory says, I'm going to do a test with HYLD and maybe some others. Small positions just to see how much the capital erodes. I like them for the distributions, though. Okay, fair enough. Fair enough. Utilities. Yeah, here's another one. So Hut and Hute. So one of the difference about Hut is Hut's global. So when you look at like XUT, that's Canadian. It's Canadian utilities. But if you want a larger diversification, Hut will give you that global reach as well. And with the enhanced version, you're gonna get a little bit more. You're gonna get that leverage in there too. All right. Ofer says, I'm looking for defensive sectors because this baby is about to tank. Oh, interesting. Yeah. I mean, there's nothing wrong with going defensive. Like, I want to point that out there. There's nothing wrong. Defensive is good. I don't think we're going to tank. I don't think we're going to tank this year. And this is interesting. At the beginning of the year, I would have told you, I would have guessed. I would have bet on a recession before the year's out. But right now, I just don't think it's going to happen. It's kind of like, it almost defies normal economic thought. But yeah. All right. Tanya says, thoughts on XIU. Let's pull up XIU. All right. XIU, here we come. So this here is another, it's a top 60 on the TSX. So this here is a nice little, I like this one. I do like it. Now, you don't get a big distribution here, 2.663. So this is going to be one of your growth stocks for sure. So dividend growth. But actually, you know what? Let's come out here. Let's take a gander here. This is nice. I mean, look at this. The Canadian market has done really well this year. Now, mind you, we have a lot of gold companies that are propping up the TSX big time. Obviously, most Most of the companies in the top 15 are gold companies, and they're doing absolutely crazy stuff. And well, just to give you one example, London Gold, one of my favorite gold companies. So right now I've got them in the challenge, and I got in with an adjusted cost base of $8.71, and whoops, sorry, I did not get in at $8.07. If I got in at $8.71, I would be celebrating. $8.71. Sorry, that's my Hammond manufacturing entry point. London Gold, $52.24. It's currently sitting at $79.54. So right now, my total return on that is 53.40%. So they're currently leading. They're currently leading. So if I did the 0 to 100 challenge update tomorrow, they would win. There's still a week left. There's still a week left to see if they can hold on to that. But I do like them. I do like them for that reason, and that is helping the TSX. Nonetheless, a lot of stocks are doing really, really well. XIU. So yeah, as long as the strength maintains in the TSX, XIU is going to do fantastic. I mean, in this here, this is just 1 year. So in 1 year, look at this. It's gone from $34 to $42. So that's not too shabby. Another one too, which is really interesting here, is HDIV. I'm going to pull them up for a second because there's something else I wanted to mention to you about HDIV. So this one here, the Hamilton, I'm not even going to read this because this is no longer their name. They changed their name. I'll show you in a minute. But first, I just want to show you that 1 year. It's the same kind of idea. Now, you'll notice it's not as steep. That's because they're using covered calls in here. And but their total return is fantastic because they are pumping out a pretty big dividend here. So 10.865% yield. But all right, let's go over here. This is fantastic. All right, let me pull this up here. HDIV. All right, let's head over here. All right, so HDIV is now the Canadian Covered Call ETF. So Hamilton rebranded its name. Everything else, exactly the same. But they're now called the Canadian Covered Call ETF. So, yeah, if you start seeing that around and you don't realize that's HDIV, that is now HDIV. Same ETF, nothing changed, just the name. And I like this. I think this is a better name for it because that's what HDIV is, primarily Canadian assets. Now, some of the stuff, there are some American stuff in that. It's not 100% Canadian, but it's more than 50% Canadian. So that to me is fine. So yeah, so Hamilton has now become the Canadian Covered Call ETF. There we go. I would have forgot all about that if it weren't for Tanya's question. I love it. Jack says, I'm up 33% on my 37.3% Google position since April. That's not too bad. It's not too bad at all. I mean, yeah, and you know what? Heck, why not? Let's just go, let's look at every single stock in the world today. Well, let's look at them all, one by one. Yeah, here is, whoops, this is the CDR. But you know what? This tracks the same as Google anyway. So I'm just going to pull this one up here, and you can sort of see, especially if you got in here from after Liberation Day. Look at this. That's a nice climb since Liberation Day. So yeah, not too shabby. Not too shabby. Yeah, since April. And there it is. April was when Liberation Day came. So if you managed to grab Google when Donald Trump was tormenting the world with tariffs, you got yourself some nice profits. Roy says, I think tech is way overbought. AI is a problem at Meta, kicking people off for no reason, claiming they are all sex offenders. Oh, yeah, I have not really looked into that, Rory. I'm not going to comment because I don't know. I tend to leave things alone if I don't have the information. Let's see. Haha, that really happened on Meta platforms. CC, everyone seems to have let their bias show in their understanding of Pal Friday. Did you hear a dovish, hawkish leaning? I do have a story. I do have a story on Friday. So we'll get to that, CC. We're going to get to that. Is it the next story? If it's the next story, I should just go to it. Let me just take a look here and see. It's not the next story, but it's we're darn close. We're 2 stories away. 2 stories away, but we are going to get to that. We're going to get to that for sure. All right. And Rory says even US media has people complaining about it. Maybe. I just haven't heard a lot. Like, I don't know enough that I could confidently speak with reliable information because I don't have any. So that's the only reason I leave it alone. Let's see. Brian says I was lucky to get Google at 114. Nice. Nice. Jersky says I've been selling my individual bank stocks lately, except National Bank. I'm up 55% on it, and I'm thinking it should go. Any thoughts? I figured I'm bank heavy with my ETFs. Okay, fair enough. I don't like National Bank. I think National Bank has a little bit more runway because they have, after they've closed that deal with Canadian Western Bank, of course, that's giving them a lot more exposure to the Canadian West. That's, I think, going to be good for them. I think that's going to be steady for them, but you can get that exposure with your ETFs as well. So, yeah, I mean, I probably would. I mean, if you've got the ETFs, that's probably fine. If you're in profit with with National Bank, then, decide that way. But maybe. I don't think it's a bad idea. Jack says, I got it at 167, but I only started stocks this April. Okay, fair enough. GOOG though. Yeah, we were looking at the CDR. We're looking at the CDR. So only because it completely tracks Google. So Google will do the exact same thing. Like here. Well, let me pull up Google and you'll see the same shape. GOOG. But this time here, I'll click on the US one here. So 206. And we just head out here. And yeah, you see, it does the exact, it's pretty much the same. All right. Rory says, I've trimmed down about 45%. Did you see how NERS and Zomad have done the last month? I have not. Let's look at ZO. We'll go to ZOMD. I always go to the first one first. Let's take a look here. So Zoomed Technology. All right. And let's just pull up the 1 month. Let's take a look at the 1 month here. All right, so 1.4 to 204. Okay, not too shabby. I'm going to pull it up here. So yeah, there's been some movement. So this here is zoomed. So basically, they're an Israeli subsidy Zoomed Limited. Basically, innovative mobile app user acquisition platform that integrates with numerous global digital media outlets. So it is a tech play. It's an interesting play. Now, mind you, and I will say this till the cows come home, it's still a little close to a penny stock for me. It's a little close. But I like to go into the back end. I always like to go into the back end when I see that. And this is one of the things I like about Zoomed. Look at this. 15% debt to equity. So they don't have a lot of debt. And they're really, look at this. They're kicking out 82.67 return on equity. So this, even though I say I don't like a penny stock, if I was going to invest in a penny stock, this would be high on my list. Because I always say, if you want to play with penny stocks, and penny stocks are risky because small market caps means that they can be impacted much harder than bigger companies that have bigger moats. But if you do want to play with them, just make sure, look at the back end. If they've got, if they got a good return on equity and they've got little debt, and what they do sounds feasible, like in this case here, it's a good technology service, and yeah, they're probably going to be okay. So that would be the type of one that I would look at if I was going to jump in. All right. Before I get to Brian, NURS. I have not. Let's just quickly take a look at NURS. Here we are. So Hydrate Technologies. Now this one, I've noticed a big jump there. Let's just pull up the 1 year. All right, so yeah, they're doing better. This one's a little bit further away from a from a penny stock, but let's pull this up. They do have, now their return on equity is in the negative. So this one is one that I would be much more weary of. So I would say Zomd, I like it. NERS, not as much, not as much. So between the two, Zomd would be the one that I would take a chance on if I was gonna go into the penny stock area. All right, Brian says Bird is like CN to me. No matter how many times I look at it, it's just not for me. Okay, that's fair enough. And you know what? I mean, I look at it this way. Every stock does not have to be for you. Actually, all stocks don't have to be for you. You could go ETFs if you want. There's nothing wrong with that. But Bird is one of those ones that you need to have a little bit of patience. Like when the big stuff starts happening for them, it's gonna be crazy good. But yeah, I mean, until that happens, you might be, it might be underwhelming. It might be a little underwhelming until that happens. And I'm hoping it happens sooner than later. Like there's still contracts out there they can be grabbing, so they could definitely be doing some stuff. All right, Rory says I still own CN, just have not bought any. Okay, fair enough. Ian says I sold my Enbridge and bought Utes. I don't want to hold individual stocks anymore. Yeah, you see, and there's a wonderful example. You don't have to hold individual stocks. In fact, holding ETFs nowadays, you can get really good diversification. And if you're worried about fees, depending on what type. I mean, obviously, if you're an income investor, you're going to have fees. There's no way around it. You're going to have higher fees. But if you're still in that dividend growth aspect of investing, where you're just growing your portfolio, you can build a really nice passive income where you've got very little fees. All right. And Brian says, I love Utes. Yeah. It's funny. Whenever I hear Utes, it reminds me of my cousin Vinny, that movie where he's trying to say youths and courts, and he keeps calling them Utes, the young Utes. That always reminds me of that. Cece, do you think the priced-in circumstances are strong enough that the U.S. SP will pitch down soon after a cut, or continue against the norm as usual? I think we could. I've been saying. Well, I've been adamant that I do think we'll see a cut this year, with the U.S. Fed. Now, will it happen sooner than later? It's hard to say. Will it happen in September? That'll be the big question. I think there'll be more pressure for it to happen in September. The last rate decision, 2 members of the Fed actually wanted a cut. So I have a feeling if that continues to grow, we could see a cut. If not September, maybe October. That's what I'm thinking. All right. Ian says I might sell WCP and replace it with Utes tomorrow. Okay, fair enough. Rory, if/when Enbridge hits $70, I'm going to trim the top there as well. Brian says I'm down 58% in Northwest Health. I've had it for a while, still paying dividends, so I haven't dumped it. Yeah, that's the thing. I mean, if they were not paying the dividends, that'd be a different story. But Ian says, let's see, I bought and sold Enbridge over the years, was up 20%. Like I said, I don't want individual stocks anymore. Let's see, yeah, ETFs that are well managed gives peace of mind. I'm slowly entering the space. And Ian says, going to get hammered by capital gains if I sell more stuff in my non-registered account to buy ETFs. Might wait until January 1st to make more moves. Yeah, I mean, that's the thing. Keep that in mind, guys. If you are in a non-registered account, selling and switching to ETFs is probably, if you're in the green, it's going to be creating some wins, some capital gains. So keep in mind as well, if you've got a few in the red, you could always do some tax loss harvesting in there to try to help that out. That's always an option for sure. Rory says, or the dagger dangling above the head. Gotta love that. Danielle says, I wasn't home for the last 3 days and missed the launching of HHIC. I was so looking forward to it. I will buy tomorrow, but I think it will be more expensive. Yeah, I'm waiting for a retracement on it. I'm hoping to get it because I really want it in the 0 to 100K challenge before the end of the week. But I'm, if it doesn't come down, I may not have it. I want it though. HHIC better than XIU. That's my opinion. Fair enough. Brian says, I need to start a GoFundMe to buy all the new ETFs out there that I want. Well, why not? It's funny. So before the days of GoFundMe, there used to be a couple of interesting sites on the internet. One was this girl who had incredible credit card debt. And she just created a site explaining all the stuff she buys and asking for donations. So, and I think these donations were coming through PayPal to pay off her credit cards. And she apparently made a lot of money. Then there was another guy, this guy that came out and he got a rabbit. And he was showing the rabbit, and then he set a donation goal. And if they did not hit that donation goal by a certain date, he was going to make rabbit stew. I think, if I remember correctly, I think PayPal ended up canceling his account or freezing it or something because of it, because it was kind of a little bit on the unethical side. But people have done some crazy things to get money. But I know the girl with the credit card, I think she made a lot of money just from people. I don't know why I don't want to go on the internet and pay somebody's credit card just because they're being irresponsible. But at least give me some useful information. Maybe I'll throw you a bone or something if you give me some good information. Rory says, let's see, or pick bottles. There we go. All right. I have no idea how far behind I am. Kawachin says, I try not to invest in certain sectors. Instead for defense, I buy. So yeah, I love Dollarama. Dollarama and some of the waste companies, absolutely. So yeah, IFC. There's a few different ones that I like as well, but WCN, another good one. Let's see, Candace, you should look at my super short blossom post today. Sundays are dedicated to lighthearted short posts in the posting saga. All right, I'll try to remember. I'll try to remember to do that. Oh boy. Oprah says, MIT research says AI investment isn't translating to earnings in companies deploying it. This is a .ai bubble in my opinion. Yeah, that's been one of the problems. One of the problems is that the companies who have been sinking a lot of money into AI have not been able to demonstrate how they're going to make profits from it. That has been a problem in the past. That actually caused a little bit of the tech sink. Actually, you know what? I'll show you where this happened. Let's go over here to all right, let's go to NVIDIA. Let's go to the real NVIDIA right here. All right, and I'm going to we'll pull out the 3-year here. So yeah, I mean, as you can see, NVIDIA had been doing really, really, really good. And then we had a little bit of this. I think, is this where it happened? It might have been, no, I think it was more in here. So yeah, in here, this is kind of where a lot of the earnings came out. And I think there was actually a stream where NVIDIA crushed earnings, but yet they fell big time. And it was all in this whole mess here. And a lot of it was that a lot of the AI companies were not showing how they were going to make money. AI had no problem making money because all of these companies who couldn't show that they were making money were still buying all of their chips. So, NVIDIA was fine, but there was a lot of worry that sort of built around that. And then, of course, that has resolved. So AI is now absolutely exploding once again, as well as NVIDIA. NVIDIA has had, look at this. And we have this Wednesday, speaking of NVIDIA's earnings are coming out. And this is what they've done in that time. So this here is what we're going to be looking at. I think I am bullish on these earnings. I think they're going to be good. But I've been lulled into this feeling before where everything looked good and those earnings should be fantastic. But then something like, for example, some people are underwhelmed with ChatGPT 5. Could that put a bit of a party pooper atmosphere on Nvidia's day? We'll have to see. I will probably make a swing trade on that, but it's probably going to be half as big as I normally would have. I probably will make a medium-sized swing trade on that, and because realizing that if it goes bad, I'm pretty much going to sit on that trade until it comes back. So I might do that. Yeah. What can I say? Yield says, I like the market to be flat or go down so that I could accumulate more shares. Still, I can earn distributions from covered call ETFs. Covered call ETFs don't stop the distributions during COVID. That's right. Yeah. I mean, most of them did really well. The only ones that really had a few issues is some of the split core had a few issues, but all right. Jim says, I just looked at HDIV. Yeah. And it is absolutely a nice one. Ian says, learn some interesting stuff about covered call ETFs and tax. ROC is basically kicking the tax can down the road. Yeah, it is. Absolutely. Absolutely. That is what return of capital. So some people hear that and they're like, oh boy. Yeah, they're just giving me my money back. Well, okay, yeah, sure. But you're not paying tax on return of capital. So if you have a dividend and you've got it and you're sitting it in a non-registered account, and let's say half of the dividend is return of capital, well, that's half that you are not paying taxes on. Well, you are, but not that year. Because what it does is it just reduces your adjusted cost base. So when you do sell someday, if you sell, then you will have a higher capital gains at that point, and you'll pay 50% on that. So that's kind of what it is. It is a way of basically putting pushing those taxes under the rug for some for future you to deal with. But that's why some people will say that return of capital is really efficient. Now, depending on what your goals are. So if your goal is 100% income, like you're like, I'm never selling this fund, I just want the income for the rest of my life, then you probably don't care. In a case like that fund, you could sit that outside of your your TFSA. If your TFSA is full, you could sit that out there and have the high ROC. So that way there, yeah, if you sold it, you'd have a tax bill, but at least a big chunk of those dividends are return of capital, and they're not hitting you. So yeah, that's exactly right. What Ian is saying. Powell is hinting on an IR cut, an interest rate cut. Yes. And I have a story. You know what? All right, I'm going to do the next story because I have a feeling that I'm never going to get caught up. Let's zip over. Let's move. We'll move. I'll do two stories so that we can get to Powell. Let's just very, very quickly. I got an Elon Musk story first. Oh boy. Good old Elon. So Tesla is experiencing what they're calling the Canadian decline. So Tesla's Canadian crash, are they going to be able to bounce back in Canada? It's not looking good. So Canadian registrations are down for Tesla, are down 67% in the first half of 2025. In fact, in Q1, Quebec registrations were actually down 85%. Now, according to Tesla's earnings, their Q2 global report, revenue from Canada was down 12% year over year. Vehicle deliveries were down 14%. Operating margins were down to just 4.1%. In fact, the drops in Canada were steeper than anywhere else in the world. So why is Tesla struggling here? And I almost feel silly asking this. I'm sure most of you can probably think exactly why. A lot of it's a brand backlash. So Elon Musk's association with Donald Trump and right-wing politics has really hurt Tesla's image, particularly in Canada, which tends to be, and I know a lot of you guys are right-leaning, but Canada overall tends to be very left-leaning. So there's been a lot of backlash because of that. So in BC, there's been protesters. They've gathered at some of the Tesla dealerships. There are just a lot of people who frankly don't want to be associated with the brand anymore in Canada. So tariffs also, well, that also came into play too. So it's not all just Elon's unpopularity. Tariffs pushed the price of a Model Y up by about $20,000. That's crazy. Federal and provincial rebates also were eliminated in multiple provinces. So, for example, the IZEV rebate program has been exhausted. Tesla also lost one of its major sales tools as a result. Tesla did claim $43 million in rebates, raising some eyebrows just before the program ran dry. So, once again, a little sketchy. They're also, in addition to all of this unpopularity, they are facing a lot more fierce competition. So they're kind of being squeezed from both ends. Chinese automakers, so BYD, have been undercutting them on price. And some of those legacy brands, so, Volkswagen, Ford, GM, they're starting to flood the market with EV options. So it's not just all Tesla anymore. Buyers have more choice than ever, and they're choosing not to buy Tesla. So what can Tesla do right now? The only one little lifeline that they still have is they do have a ZEV credit. So Canada's zero emission vehicle mandate means automakers have to sell a percentage of EVs. So currently it's 20% by 2026, 60% by 2030, and 100% by 2035. Oh boy. And we already kind of know, like we've talked about this on the show many times, this is unsustainable. There's no way we're going to be able to hit these. Something has to be done with the EV mandate. It's not going to work. But right now, this does work in Tesla's favor. So selling only EVs generates surplus in ZEV credits. Other automakers are then forced to buy some of those credits from Tesla to comply. Even if they aren't selling cars, Tesla is selling credits. So they're making some money by selling credits, of all things. Oh boy. But overall, they're still in a no-win price trap. Tesla, they can cut prices to stay competitive, but angers, that will tend to make people angry who've already bought Teslas. And it also will kill any kind of resale value. And honestly, it still might not be enough to match some of the new market realities. So Musk is kind of in a no-win scenario in terms of trying to redeem the brand. So what can we do? As I said before, the EV mandate, unrealistic. Forcing supply before consumer demand, it never works. And automakers are generally pushing back, calling it costly and poorly timed. So a lot of insiders want that mandate scrapped, or at the least overhauled. What can I say? All right. Now, you guys have been dying for this one here. All right. for Papa Powell, what the heck is going on with the rate cuts? That's what you guys have been dying for. So Papa Powell, could we be looking at a U.S. rate cut? Could one be right around the corner? So, of course, he was speaking at the Jackson Hole Symposium on Friday, and he said that the Fed may need to adjust our policy stance, basically in light of shifting risks. So that's not saying there's going to be a rate cut, but it is the clearest signal yet that a rate cut is being considered, possibly possibly even as soon as they're also meeting on September 17th. But he also emphasized that the Fed will proceed carefully and make data-driven decisions. So he's not sort of putting it out there. He's just saying, look, we're considering it. But the data is still going to be the big thing. So kind of, in many ways, the U.S. Fed, I mean, I imagine it feels like they're walking on a tightrope of all things. Cutting too soon obviously risks fueling inflation. Waiting too long risks a job downturn. I think a cut right about now, even just one, even if you had one cut and stayed the course after that, I think that would go a long way. Also keep in mind, Donald Trump, oh boy, he has been demanding rate cuts. And he says that it will, some rate cuts right now will lower government debt payments on the $37 trillion national debt, stimulate the economy heading into that 2026 election. So yeah, he's thinking about the midterms already. And he has, of course, launched personal attacks on Fed, on Lisa Cook and Powell. And, and I also, you guys probably have heard there's also some legal stuff going on right now, too, and the whole fraud situation. Oh, boy. So Powell did acknowledge that tariffs are now visibly raising inflation on things like furniture, toys, and shoes. And he says that while inflation has cooled from its 9.1% peak, he says it's creeping back up. So headline inflation sitting at around 2.7%, core inflation sitting at 3.1%. And he did say that tariff-driven inflation could limit the Fed's room to cut rates aggressively. So that's kind of off the table. Aggressive rate cutting, he's not going to do. But will we get that single one? I think we might. We might. Right now, the job market is holding. Hiring has slowed, but unemployment remains low. So that's kind of one of those things that has worked against the Fed. It's worked against the Fed for sure. Powell also noted that falling immigration means fewer jobs are needed to keep unemployment stable. And right now, he says sluggish hiring is still sluggish, and there is rising layoffs and some growing downside risks. So we'll have to see what they're going to do, because they're kind of getting into a situation where it's either fight inflation or fight job losses. So that's kind of the interesting things. Of course, for Canada, if they cut before the Bank of Canada, it could weaken the U.S. dollar, boost our loonie, ease pressure on Canadian exports, and trigger capital flows back into Canadian equities. That would be nice, actually. It could also force the Bank of Canada's hand, especially with our inflation now at 1.7% and housing softening. So, yeah, I mean, if they cut, Canada kind of will probably have to cut in the next meeting after that for sure. So what can I say? What can I say? That's our Powell thing. I think there's a chance we could see one in September, if not September, October. I think it's kind of a given. I think it's kind of a given that that's going to happen. All right. Oh boy. Now let's get back to you guys. We got a couple more stories done. I'm happy about that. All right. Let's see here. Bank of Canada is 100% cutting to bail out the housing market. We'll see. Let's see. What do you think of CH Charbone Hydrogen? It's a penny stock that I hold because I believe in this company, but I know it's risky. Is it CH? Let me take a quick gander here. Whoops. Let's pull it up here. There we go. All right, CH. So yeah, I mean, risky is always the name of the game when it comes to a penny stock, and this is a big penny stock. We're talking 6 cents. And not the type where the kid sees dead people. 6 cents. Yeah, I mean, at one point it peaked up to 12 cents. Okay, interesting. All right, let me see what they do here. That's kind of important to know. Here we go. Let's see. So Canadian Green Hydrogen Group established in North America. Well, that's a good industry to be in. Green hydrogen is something like there is on the East Coast. They're working on developing a green hydrogen farm. that is going to mostly send a lot of that to Germany. So I am liking, I do like that. I do like that. But let's come in here. I want to see the back end of this company a little bit. I'm a little worried just because it is such a low number. But let's see what we got here. I don't get anything. I got nothing. That happens sometimes. Yeah, it's not really giving me much information. So this is the type of company that I would want to do a lot of more research on. I would want to really, really look at it before I would get involved. I do like what they're doing, but I would just say this, Danielle: don't put a lot of money into it. Put what you don't mind. Like I always talk about play money. So have a certain amount of money that you can use just for riskier stuff. That would be this. That would be this for sure. All right. Taron says, NVIDIA earnings expectations. I expect them to exceed expectations, both on EPS and revenue. I think they're going to come in strong. Does that mean the stock is going to explode? I'm going to make a bet that it might, but I'm always a little worried. I have seen NVIDIA exceed expectations, exceed revenue, and then flop. So now, mind you, there's other stuff going on too that sometimes pulls into that. I think the whole Blackwell thing was in there as well. So I'm gonna hold. I am probably, like I said, I'm gonna do a swing trade on it, but I'm gonna do about half the size I normally would, just because I can't be. I've been burnt once. I'm not even. Well, I won't be burned because I'm. If they do go down, they'll be back up within a month. I'll be back in the green, no problem. So, I'm just gonna kind of look at it from that perspective. Rabbit spaghetti. Now I have an idea. I talked about that quite a while ago. I'm really far behind. Let's see. Best quote from you that helped me a lot during these volatile times is nothing's wrong with taking profits. Absolutely. Let's see. I sold all my Tesla position for like 10% profit and bought MSTE when it was all bottomed out last week. And hey, was dancing this Friday after METE went up big time. Nice. Yeah, gotta like that. What used to be the price of a whole new car just in tariffs? Well, yeah, exactly. All right, guys, I am so far behind, I'm going to probably skip over a few little comments, all right? Danielle says, I've had a Tesla for the last 2 years. I don't like Elon, but it's the best car I've ever had. I feel bad driving a Tesla, but on the other side, I just love it. All right, I'm never going to put somebody down because of their car brand, even if it's a Tesla. No, I'm good. Brian says, I own a 2008 Honda Civic Hybrid as my second car. It was parked behind my BMW 528, so rarely driven. 123K on it, and the battery's dead. 5,500 for the hybrid battery. It's a boat anchor to me now. Yikes. Yeah, that's never good. Never good. All right. Mohammed says, hello, Candace and company. Hello, Mohammed. How are you? All right. Michael is in the house. How is LZB's earnings look from last week? Good question. I do not know. Let me find out here. Let's take a kick gander here. LZB, right? LZB. We're over here on TradingView. A Lazy Boy. All right, Lazy Boy. Let's get down here to Lazy Boy. Oh boy, look at this. I can tell you without even looking at the earnings, they're not good. Look at this. That's a big drop. $39, and they made it all the way down to 31. They wicked down to 31. So let's see, what did they do? Well, revenue, they did exceed slightly on revenue. They did a little better on revenue, but their earnings per share came in a little weak. So yeah, they were they missed their earnings by 10.76%. That will drive them down. Now, here's the good news. Here's the good news, Michael, is that they've been moving back up pretty strongly since then. They made it all the way back up to their moving averages. That's always a good sign. That always shows that there's a little bit of strength in the company. So I'm okay with them. I'm okay with them. Hopefully they do better in their next earnings, though. Is there a broker you would recommend for beginners? Well, yeah, I like Wealthsimple for beginners. I think it's really easy to use. I would highly recommend Wealthsimple for sure. And I'll drop the link in there for you. There we go. It should be dropping into the chat here in a moment. All right. And yeah, Jack is saying Wealthsimple as well. Ian says, I've got my portfolio down to 12 holdings. How many do you hold? How about the people in chat? Well, across all my accounts, there's probably maybe 20, 25, 30. I'd have to count, Ian. I don't have the number off. I don't have it memorized for sure. Let's see. Yes, 100%. 123K is nothing. The gas mileage was not worth it either. They had a lawsuit against them because of it. I had $1,000 credit on a new Honda car that expired because of it. Yeah. CC says governments need to better track appropriate employment statistics, people working minimum wage, survival jobs versus a strong economy creating quality jobs from steady growth. Yeah, that's one thing. When you look at jobs numbers, it will tell you how many people have jobs, but it won't tell you that, how many people who are full-time are being forced to work part-time because that's all they can get. And they can't even support their family with it. So yeah, there's a lot of data that's not in those job reports that I think are relevant for sure. All right. Let's see, $1,000 credit is a joke. They should have to give out $1,000 in stock. All right. So each time NVIDIA reports this year has sold off. Yeah, and that's one of the reasons I'm being a little bit cautious. I'm being a little cautious, Michael, with this one. All right. CC says, my point, meaning university college grads not able to get careers appropriate to their education. Yeah, absolutely. Let's see. Got it. Thanks, guys. Thank you. Thank you. There we go. Perfect. I'm finally caught up. All right. That means we can get to another story. Oh boy. So Enbridge and Synovus have gotten themselves into a little bit of a pickle. So greenwashing. They're being accused of greenwashing. So this is being taken to court. And they're saying, according to the complaints, Synovus and Enbridge are misleading investors. So the complaint are misleading net zero claims. It was filed by Investors for the Paris Compliance to Alberta's Securities Regulator, which is an odd move. So they've actually filed the complaint with the Alberta Securities Regulator, opposed to the courts per se. So that is kind of interesting. They're claiming that Synovus and Enbridge have misled investors by omitting Scope 3 emissions. So that's basically emissions that are caused by customers who use their fuels, and that they failed to show clear strategies for reaching their net zero goals, and that they've been making overly promotional claims without backing them up. So this is probably the first time that securities law is being used in Canada to try to tackle corporate greenwashing. So most expected, so there's Bill C-59. So that's Canada's new anti-greenwashing law. It tends to be a tool of choice, but instead they've decided that they want to go with securities law instead of taking advantage of laws that are already in place for anti-greenwashing. So they said the reason is that investor protection is a legal duty under securities regulation, and that companies are legally prohibited from omitting material facts or making false statements, even in ESG disclosure. So they're kind of using loopholes against them. That's kind of what happens. So this could be very interesting. And it could be, it could very well have interesting ramifications depending on how this all comes out. So basically, Synovus and Enbridge both have net zero pledges that only cover emissions from their own operations. So they're not including any of the emissions from burning their products, which make up the majority of their environmental impact. Okay, that makes sense. Critics say that it's like bragging about clean hands while dumping oil into the river. I don't know if I go quite that far, but sure, why not? Um, so they're basically asking them, they're not asking them to stop operating or anything like that. They just want them to be honest. So that's kind of what they said is we want them to be more honest in their disclosures. So tell people the truth. Let them know what you're really costing the environment. Now, Enbridge, in response, said that they've already cut their emissions by 22% since 2018. And they said they've modernized their infrastructure using greener electricity and investing in renewables. And they do deny any misleading intent and claim full transparency. This group's not buying it. The critics are basically saying it just doesn't go far enough, especially when full life cycle emissions are ignored. So the chilling effect of this bill. So after Bill C-59 was passed, Synovus and other Pathway Alliance members, they basically scrubbed their website of climate change, climate claims. That makes sense. Basically, if you don't make any claims, you can't get called on them. The oil patch says the bill makes it too risky to promote green initiatives, and critics say the law is working, forcing accuracy over hype. Now, why this could be really interesting is that if the complaint is upheld with the Alberta Securities, it basically sets precedent. Greenwashing can now lead to investor-focused legal action. Companies will need to back up climate claims with the same rigor as financial data. So this could in fact have an effect of reshaping ESG marketing, especially in sectors like energy, mining, and even finance. So, oh boy, what can I say? All right, we got one last story left. Let's get it done. Let's get it done. And then we don't have to worry about it. So, young Canadians are just not paying up. Young, broken, falling behind. We've got a new debt divide in Canada. So, delinquencies are surging among young Canadians. So according to Equifax, so they're one of our credit reporting agencies, they're saying that 90-day plus missed payments are up nearly 20% year over year. And the biggest jump, Canadians under 36, especially on credit cards and auto loans. This, of course, is very reflective of what's going on in the economy. I mean, people don't have money. And as simple as that. People just don't, some people are like, do I eat or do I pay that loan? Well, you gotta eat. If you don't, you're gonna die. That's pretty much how it works. So right now, about 1.4 million Canadians have missed a credit card payment in the last quarter, and youths are, they're leading that surge. So there tends to be two solitudes in this mix. We got mortgage holders versus renters. The delinquency rate for renters and non-mortgage holders is 1 in 19. And for mortgage holders, it's much better. It's 1 in 37. So the gap between the two has more than doubled since 2019. So in 2019, the gap between renters and mortgagers was 45%. Now it's gone up to 96%. So those without a mortgage, often younger Canadians, are basically increasingly turning to credit just to keep up. So what can we say? Obviously, the reason this is happening is we've got a very weak job market for youth. So in July, as I mentioned, and I mentioned this I think last week, 34,000 jobs were lost for those aged 15 to 24, and the employment rate fell to 53.6%, which is the lowest outside the pandemic since 1998. And many younger Canadians, they lack savings, meaning credit balances. Well, credit becomes survival, not really convenience. Credit card spending is it's up big time among renters used for essentials and not luxuries. This isn't really about overspending. It's kind of about under earning. So there are, with all of that being said, there are a few signs of hope. Overall delinquency rates may be stabilizing, but those youth financial stress will remain high unless, of course, businesses start hiring again. That's what we need to see. We also need to see investments increase and youth-focused roles open up, potentially potentially helped by recent immigration pullback. So let's get them working. Let's get the youths working. Going back to my cousin Vinny again. All right, coming up in Canada on Friday, we have our Q2 GDP dropping. So that will be fun. In the United States, oh boy, they've got the PCE, so your personal consumer expenditures. That's dropping on Friday as well. Earnings-wise, Canada, we got the big six banks. We got Dollarama. We got the little banks too in there, like EQ Bank, all of the fun ones. And in the U.S., we got NVIDIA. So NVIDIA is gonna be dropping things. All right, that's the news. The news is done. Yay! So there we go. Now it's just you guys. All right, let's jump ahead here to Ian. So I just started buying Utes. How to help you with that. Okay. I just started buying Utes last week, and now it's my third largest position. Might have to lay off buying them for a few days. Okay, fair enough. Let's see. Your Utes is going to turn into my EIT using green electricity. There we go. All right. Well, that's not to me. That's to Cece. All right. Jack says, I did take out 3,000 cash advance this month to go all in on one crypto because I'm already 99.9% invested. Recession indicator. Okay. All right. Interesting. I don't know what crypto you went in on, but hopefully it worked out. Scratch. Ask a climate change activist the chemical composition of air and ask them what is the percentage of CO2. They don't know this basic fact. Yep. Good old CO2. Actually, there's more nitrogen in the atmosphere than oxygen, that's for sure. JJ says, that young data set is kind of skewed. I'm a young renter and I chose to rent. Hate dealing with property maintenance, and so no home buying at this time. And that makes sense. That makes sense. All right. Now I'm like thinking, did I just get my data right? Did I get my... All right. I got to find out. Let's go to Google. Let's go to Google. All right. All right. Google. All right. Here we go. All right. Let's go to the air composition of the Earth. All right. Let's take a look here. Yeah. I was right. I was like, it just came out and I'm like, well, I'm sure I'm right. But yeah, so nitrogen, 78.08%. Oxygen, 20.95%. Argon, 0.93%. And here's carbon dioxide, 0.04%. So there's not a lot of it up there. And there's other gases as well, like neon, helium, methane, krypton, hydrogen, and probably more. But anyway, yeah, so it's mostly nitrogen. I was right. I said that and I was like, have you ever said something you knew and then you're like, then you second guess yourself? I was second guessing myself. I should know better than to do that. Brian says it won't be long and any numbers of the U.S. will not be believed. Trump alienates truth. Rory, we must ban nitrogen, CBC reports. Well, I don't think they're talking about nitrogen in the air. I think they're talking about nitrogen like for plants, or at least for fertilizer. I weld with CO2 gas at the shop. I'll turn the pressure down. Okay, thank you, Brian. You're doing your part. Been there, done that. Second doubting everything during exam time. Oh, I know. It's a proven fact that when you write an exam, when most times that you change your answer, you change it from the right one to a wrong one. That happens to me every time. Every time in an exam, I change an answer. It goes from a right to a wrong. And you know, and it did cost me on one exam big time once. But I'm not going to talk about that one because I'm still sore about it. I passed with flying colors, but it was basically I wrote a perfect exam, but then I second guessed one answer and I changed it. I ended up with a 99 because of that. So that's why it still burns. And that was just high school. That was grade 12, but it still bugs me. All All right. Let's see. That's like nitrogen in tires. Absolute scam. Krypton might be high on my sick days. There we go. Yeah, good old Krypton. Ah. Okay, guys, we're getting close to the end. This is where I give my last minute question call. So if you got your last minute questions, get them on in. We'll get them up. We'll bring up anything. You know, we'll do whatever. Just get them in. All right. Now, as you guys do that, I'm going to bring up housekeeping. Housekeeping. That's what we're going to do. So, next video, we're going to look at the S&P 500 from a whole bunch of different angles. So that is Tuesday video. You'll be able to see it tomorrow if you're a channel member. All right. Also, the video after that is the member's choice. So if you have a video idea that you want to see me make for Friday's video, head over to the community tab, get it down, because I'm going to get those off to the channel members probably by no, it won't even be Tuesday. I'm going to get those off to the channel members probably first thing tomorrow morning, so that they can vote. So there's some good ones, and I will tell you, actually, in the channel member live stream that we had on Thursday, one of the channel members came up with an idea. I'm probably going to add this. I will add this to the list. It's going to be one of the ones they can vote on because I love the idea. It is, how do you handle a windfall? A windfall. So, you know, you win the lottery or you get a big inheritance. How do you do, especially if you're coming at investing fresh from that? How do you preserve that? How do you make that work for you? I just love that. I love that idea because I thought about it and I was like, you know, you could probably do multiple videos on this. You know, like we could do like $100,000 windfall video, and then maybe, you know, 6 months down the road, do a $1 million, a $1 million windfall. Anyway, I just thought that was a really good concept. So that is something that we're going to definitely put in there. We're going to put that in there. So that's coming up as well. Next 0 to 100K in the following week, the first 2 videos, because in September, we'll have the 0 to 100K challenge and the bank reviews. So those are all coming up as well. This is going to be fun. This is going to be fun. All right. What is your swing trade this week, Candace? I don't know yet. I'm going to take a look. I've actually, Rory, I've been thinking about this. I've been thinking of a way to add value to the channel members. And what I think I'm going to do is I think I'm going to start posting my swing trades on the channel member post. And let them sort of have a heads up on what I'm doing there. I got to figure out the exact format of it. I'm going to work on it, try to get that instituted this week. But it gives a whole bunch of extra value. So then that way there, if anybody does want to follow all these trades I do, join the channel membership. You'll be able to look at them all. I'll still tell you guys about some of the bigger ones. I won't tell you about all of them, but you know, the channel members, I'm going to give them a much bigger view on what I'm doing trade-wise. All right, Michael. Michael says, which is the best sector for this time of time that I was thinking the drug sector could be? Well, the drug sector is not your best at this moment. But I would say it's kind of interesting. We're kind of in this interesting time right now. I mean, tech is doing better than it should. And I still think tech has more runway to go. But I also like the defensive sectors. I still like utilities right now. I still like infrastructure. I think infrastructure is going to be a really good play. Like, get in now, and it's a bit of a patience play. But I don't know about healthcare. Healthcare, I'm kind of on the sidelines. I don't have any desire to touch healthcare right now. Not until we get a little bit better idea of what's going on. Brian says, thanks for your patience, your expertise and patience. I listen very carefully and get used to the lingo all while doing my research. Awesome. Bismarcky, did we talk about Meg Energy? Right. So yeah, Meg Energy has been purchased. Synovus has purchased Meg Energy. So I haven't. The story broke after I wrote all my news articles, so I don't always do some of these, but I do know what happened. I don't know any of the fine details. I haven't read them, so I don't want to go any deeper into that Meg Energy purchase. But yeah, it has happened. And well, let's take a look and see what it actually did to the stock, though. That'll be the interesting thing here. And Meg, here we go. Meg Energy. Yeah, it looks like we got a little bit of a bump. So yeah, a little bit of a bump here. But yeah, because that was, I believe that was announced on Friday. So I think it's a good move. I think we're going to see a lot of the smaller energy companies being gobbled up, especially if we start to head towards any kind of a recession or anything like that. I think you're going to see a lot of these smaller companies get eaten, devoured. And I know somebody mentioned Paytex. You know, I wouldn't be surprised if somebody ate them up. So, all right. So what about that 2025 Candace trading course? Is that launching anytime soon? Not anytime soon, but I'm mulling over a few different concepts with that, and I'm trying to think of how I want to do it. But it is something that is on the mind. Bitcoin, top of the cycle prediction, 130. That's my prediction, 130. I could be wrong. It could easily go as high as 150, but I see one more big move, and then I think at that point we might be ready for crypto winter. Might be, but it's been really hard. Now, with all of the institutional investors moving into Bitcoin, it has made things a little bit less predictable, and I like that. I actually like that. All right. And yeah, that's what we just sort of mentioned. And Brian has just joined the channel membership. So congratulations. Thank you, Brian. So Brian will be able to watch tomorrow's video tomorrow afternoon when I get it out. And Brian will be able to watch some of these swing trades once I get that finalized this week. So love it. Yeah, I can't wait. Now you can, Brian, you can now watch the previous, some of the previous live streams if you want. They're all there for you. Kelly. Actually, it was Kelly who came up with that idea. The windfall idea. I believe it was Kelly, right? Confirm it, Kelly. Let's see. If I want to buy a stock for market opening Monday morning, should I queue it tonight or wait until the opening? I have one queued, but can cancel if waiting is better. I always like to wait, and I'll tell you why. What I like to do is I like to get a good look before, let's say, for example, I want to invest tomorrow. Let's say tomorrow morning I'm thinking of investing in Enbridge. I'm thinking of buying some Enbridge tomorrow morning. One of the things I will like to do is I like to take a look at futures and get a feeling for the way the market's going to move tomorrow. Because if it looks like that market's going to be going down, so if futures and everything else is indicating that we might be seeing a bit of a red start to the day, well, maybe I don't want to pay market price for Enbridge. Maybe I'm thinking Enbridge might go down a little bit. Maybe I can just, save a tiny bit of money on that purchase. So I always like to look and see what's happening with the market to have a general idea. So I don't like to buy market price unless I'm doing it right away, because so much can change between, if you're waiting. So I would say I would cancel it and look at it in the morning and sort of see what's going on. And also keep in mind too, in that first minute, so the first minute of the market, even if you put an order in, it's probably going to take a little bit to get processed. So I don't even put in my order in that first minute. I watch and see what it's doing in that first minute. And, because sometimes it might go up and then come right back down. And then that's always kind of good, because then by waiting, I end up getting it on the down opposed to that up. All right. Scratch says, thank you, Candace. Wish you huge green candlesticks. There we go. UNH to the moon. Need more rockets. Baytex that'd be nice. I'd be okay with that. Brian, a lot of smaller oil companies got bought out when oil prices tanked years ago. Yes, that is true. Truth. Mohammed says, how much would the trading course cost, please? I have no idea yet how I'm doing it. I've got a whole bunch of different concepts. One was to have just individual, I don't know what I would call them, sort of like just little tidbits, training tidbits that, there might be pricing on it based on each one, or there might be, if somebody wants access to everything, then there might be some kind of a deal on that. But right now, it's still far away. It's still far enough away. Yeah, it is still far enough away. Now, what I do, obviously, if you're looking for coaching, you can, if you reach out to admin@mountainfinance.ca, let me know. We can certainly work something out. I do coaching, but that's more of a one-on-one. Basically, it's kind of like me and you in a in a teleconference. All right. Rory says Trican Wealth Service is another one. Okay. Let's see. ESI still really cheap. Looking at my TFSA, it's all cover call ETFs except EIT. 7.8 return looks poor compared to the cover call ETFs. Will EIT ever raise that dividend? I want EIT to measure the dividend, to measure it, to raise it. But I have a feeling they're happy at 10. But if they keep doing really, really well, I'd like to see them like maybe push it to 11 instead of having some of their, some of their special distributions and things like that. What is futures? All right, futures. It's kind of a form of options. They're a form of options where basically people are betting on the future. And when investors are all betting the market to go up, it's usually a good sign. If everybody thinks the market's going up, there tends to be a good chance that it probably is going up. They can be wrong. They can absolutely be wrong, but most times it gives you a general idea of what people's ideas are and what people feel is going to happen, and it tends to be pretty accurate. So, for example, when you if you go to, well, I'll give you an example here. Let's see here. I don't know if there's anything up yet right now, but if we go to CNN, so let's just see CNN, and all right, there we go. Business. So right here, they're showing you a little bit. So they're showing you the regular markets, and they're showing you the fear and greed. All right, let me just click into the markets. All right, and they give you some of the after hours. And now, I thought they had like a futures in here somewhere. Just give me a second here. Business, economic, ET, currencies, bonds. I thought they had futures in here. Maybe they don't anymore. I know I used to get it from here, and it might be as well that because they're not available yet, that it might not be here. But a lot of times it will give you just a general idea on the futures. But if you do a search on futures, it can give you some of that data, which is definitely a good thing to have. But it is good to know where things are going, because futures, of course, start trading long before the market opens. All right, and I probably, you know what? I would love to do a video on futures. It wouldn't get a lot of views, though, unfortunately. Enbridge pays me next week. Nice. Brian says, we've been waiting for EIT to raise the dividends, but I don't think they are in any hurry. They have been increasing in total return because of the stock price. I know. Is Mr. Math going to give a guest lecture? That'd be funny. Thinking of doing put options on CNR. Interesting. And then it's okay. I think EIT might have to change some things. They are great, but cover call ETFs will take some of their retail investors away from them. Thoughts? Yeah, they will. I did get excited at one point when Canoe Financial announced a covered call. It almost looked like it was a covered call version of Canoe, but it wasn't. And I lost the excitement pretty fast. But I would love to see a covered call version of Canoe for sure. There will be less carloads due to canola, steel, aluminum tariffs. Yes, yes, absolutely. But keep in mind, they still have domestic, both Canada and U.S. So, for example, any of the CN's movement within the continental U.S. is that's not going to be impacted by tariffs. Neither any of their movement up in Canada will be. It's just the stuff crossing the border. And let's see, Muhammad, you have to learn options. Plenty of places to get info. Yeah. And as a beginner, options is not where you want to start. You get comfortable with investing before you even think about options. So for now, I would just say, just get, sort of figure out what, as your first step, figure out what it is that you want from investing. What are your goals? And this will, part of that will come down to how old are you? If you're 20 and you got a giant road in front of you, your investing experience is going to look a lot different than if you're 55 and you've got maybe 10 years to retirement. So there's going to be a lot, depending on how old you are, there will be definitely a big difference in how you approach it. And, and that's why, well, normally when somebody asks me, what should I do? I try to fish for more information because knowing where you are in your investing journey gives me that area. It gives me basically a foundation to work off of. Brian says, I'm selling off some EIT and it's moving to cover call ETFs, but even after selling off, I'm still at 18%. That's a good amount. I'm okay. I mean, I'm not going to sell my Canoe. I'm just going to leave it there. I'm fine with it. Let's see. Hello, Candace. The tin produce in Congo, Alphamine, has recovered and restored its dividend, but not sure if it will hold it much longer. Interesting. Let's see. Brampton just picked up the Coke can contract, sidestepping aluminum tariffs. I heard about that. That's cool. I like that. All right. So you're 52. So all right. So there you don't have a long runway, but you got a long enough one. I mean, you've got easily 10 years to work with, if not maybe a little more. So that's not a bad thing. Not a bad thing. So I would even right now, I wouldn't even get into, I would get into some basics. Like what I usually will tell people is, you know what? If you're anxious to start making your first purchases, I would stick with maybe an ETF, a basic one, something like a simple S&P 500, like Vanguard, like VFV, or even something even more basic like XEQT, which is an all equity that covers everything. So I would look at some basics like that, just a place that money can sit and it's still making a return. And then get into learn mode, learn things. And that way there, your money's still working for you, but you're not learning the hard way. The hard way is, and this happens, people will come in and they'll be like, oh, look at that giant dividend. I'll just throw everything in that. And then it crashes. And then they don't know how to handle that. And they're like, uh-oh, that price just went down. I just lost half my money. Well, what's going on? And they pull it. And at that point, they realize that loss. So there's a lot of different concepts. So if you have something nice and safe that you can put your investments in, and then get into learning mode, learn what you want, because you may not even know fully what you want. Learn what you want. Learn what your goals are. Learn how you're going to get there. All of those fun things. Start with the basics. Work your way up, and that way there you will have that foundation. And when you do make a bad move, and you're going to make a bad move. You will. No, 100% guaranteed you're going to make a bad move. You'll know how to handle it. You won't be in a situation where it's like you'll panic. And I've seen that happen. I've seen new investors come in, make a couple of really bad moves, and then just pull their money, take the loss, and they run and they run away from investing. So yeah, just take it step by step, take it easy, get in with some, like I said, some very basic stuff, whether it be a VFB, an XEQT, just something simple that you can just, you can put your money into, you can dollar cost average it while you're learning about everything else. And you're learning about, and then you can start expanding. Once you have learned a bit, then you're like, okay, I understand this. Maybe I want a very simple cover call. I want to get some income coming in. All right, great. Let's bring that in. So yeah, it works. It works pretty well that way. All right, let's see here. All right, JJ says, technically, if you do a 50-50 HHIC and HHIS, it's almost like a cover call version of EIT, since the underlying holdings could be quite similar. Yeah, sorta. Although I would almost say, though, I would say 70-30, HHIC to HHIS, because, there's a lot of Canadian stuff in EIT income fund. But, there is also American stuff, too, so I don't know. I wouldn't go, maybe 60-40. Now I kind of want to analyze it, but I'm not gonna, but Brian says, I like EIT. It's kind of like money in the bank. Just need a little better income from it. Yeah, I hear you. Let's see. Roy says, I'll pull the trigger on a cover call ETF at exit div date on 29th on September 3rd. Let's see. That's a great point, Candace. That is what I'm struggling with. Don't know what I would like and don't know where to start. Yeah, and that's the whole thing. What I would say, Mohammed, as well, is just take a couple, like the basic stuff I just mentioned here, like starting with a couple of very safe passive ETFs, and then start learning. There's tons of videos on this channel that you can consume. You can come in and bring, and you know what? Here's the thing. Get a piece of paper, get a notebook, write down the questions that you run into, and bring them with you to the next live stream. And you can always ask them. Maybe we don't get them all answered, but maybe we do get quite a few answered. So bring them. Yeah, bring them for sure. Ian says, EIT 7.8% was a great return a few years ago. Times have changed. Cover call ETFs have less upside than the market, but EIT has had much upside in the last few years. Yeah, EIT has had a really good run since about $13 for sure. Rory says, I started with penny stocks and lost 70%. Yeah, that is what happens. What do you mean by passive ETFs? A passive ETF, so VFE is a passive ETF. Basically, minimal rebalancing. They just basically track the S&P 500. They're not doing anything really spectacular. The management team, pretty much, they will come in and rebalance. It might be semi-annually. I think it is semi-annually with VFE. And they'll just do that. The rest of it, it just runs on its own. It pretty much runs on its own. So as a result, they don't charge you a big management fee. It's very small. I believe with VFV, when you get to the management expense ratio, it's like 0.11%. It's pretty small. JJ says, also reach out on Discord. The community is willing to help. Yeah, absolutely. Let me drop the Discord link for you. Yeah, I mean, even if it's not me, there's always somebody on Discord who will, help you out help you out. And it might be me. I try to get on there as much as I can. Let's see. I guess EIT has done okay the last few years. Will do. Thank you so much. XUS is semi-annual as well. There we go. VFE is 0.08. But I thought the 0.08 was the management fee. I thought the management expense ratio was like 0.11. I could be wrong. But, I'm just pulling it out of what I remember. And like I said, I'm pulling it out of my head. So if you've got a computer in front of me, listen to JJ. And JJ is saying I'm wrong. You got that wrong. Okay. Fair enough. Let's see. Oh, there's a Discord to this channel. Friggin' awesome. Yes, absolutely. We got a Discord. Love the Discord. All right, guys. We're coming up. JJ says, I'm the mod. I'm always right. All right. Fair enough. What is the difference between VFV and VOO? VFV is from the Canadian Vanguard. So it is, other than that, and VOO is the US Vanguard. So they pretty much are holding the same stuff. But one of the big differences is taxes. So VOO, because it's from the US, if you have it in your TFSA, any taxes that come in from sorry, any dividends that come in to VOO, the IRS will take 15% of those, their withholding taxes. They'll take that away from you. Now, if you hold it in your RRSP, that's fine. They will leave that alone because the tax treaty between Canada and the United States recognizes the RRSP as a registered account. If you hold VOO outside of a registered account, so like in a regular cash account, you'll have the 15% taken off, but you can get some of it back at tax time because you can, basically apply for a foreign tax credit. All right. So with that being said, now with VFV, there is still taxes. So there is still withholding tax, but, and here's the big but. One, it's not really 15%. Vanguard is a big enough company that they have pretty good deals with the IRS, so they're probably paying about a 5% withholding tax on all of those dividends. But that's all happening before they even give you your distribution. You don't see any of that on your end at all. And it doesn't matter what you hold VFV in, that's happening for all of them, for all accounts. But it does happen behind the scenes. So in my opinion, VFV is probably your best bet if you're holding it in anything but your RRSP. If you're holding it in your RRSP, then VOO I think is probably your better choice. But keep in mind too, even though you don't get hit with that 15% withholding tax on VOO inside of your RRSP, when you pull it out, you get taxed on everything because 100% everything in your RRSP is taxable when you pull it out. All right, Rory says, it's supper time in Ottawa. It's getting there. I can smell food. I think. Or it might just be the lights I'm smelling because there's a lot of lights in here. VFE is in CAD. VOO is in USD. Yeah, that's another distinction as well. If you have CAD, buy VFD. If you have USD, then buy VOO. Simple as that. There's more nuances, but that's the gist. Well, yeah. Listen to what I said. I like my answer a little better. People talk a lot about expense ratios. They can charge me 20% if they are beating everyone else by a lot. Exactly. That's what I always say. If you're happy, look at the ETF. If you're happy with the amount of money you're making and you're happy with the returns you're getting, who cares what the management team behind the scenes is? They have to get paid. They have to get paid for doing it. So yeah, it's to me, it's not really a huge concern. All right, I wouldn't believe CDRs. They have to pay dividend tax in a TFSA. Let's see here. Honestly, Candace, you'd be right if the withholding is actually 15%. Then the performance between VFV and VOO, excluding currency fluctuations, would be exactly 15%. But it's more like a 6% difference. Well, that's what I was talking about. I was mentioning as well, like with the deal, a lot of big Canadian companies, especially management companies, they're not paying a 15% withholding tax. There's a lot of special deals that are made between basically between the IRS and some of these companies. So a lot of them have reduced rates. VOO would need to be purchased in USD as opposed to CAD for VFV, right? Yeah, exactly. Now, if you have CAD in your account and you buy VOO, well, your broker will just convert the CAD to USD, buy it, but they'll hit you with conversion fees and all of that. It's not cost effective. It's not cost effective at all. All right, so let's see. I just thought at first if I bought the CDR, I would get around the tax. Well, no, they're still getting hit. The CDR is still paying the tax. But once again, Jack, you take CIBC. I don't know what tax rate they have with the IRS, but I'm pretty sure it's not going to be 15%. They're probably got a good deal. Superman now on digital. Yeah, there we go. Oh, you know what? Let's head back here. I don't want to get hit with like a copyright thing from DC. JJ says you only get around that if you buy the USD stock directly in the RRSP. Can't skip that otherwise, unfortunately. Yeah, exactly. All right. All right, here we go. And great. Thank you all. All right, guys, it's now 2.5 hours. I think that's long enough. I'm going to have some supper. I think I'll have some supper. Guys, once again, another fantastic stream. Thank you guys for all being here. I will see you guys on Wednesday. We have the market close, and I'll let the channel members know what I'm doing with the swing trading, because that's going to be interesting. So all of that fun stuff. All right, guys. Until next time, take care, and we'll see you later.